So how much can a bookkeeping business actually make? Now, I got started back in 2015, and the bookkeeping space looked a lot different than what it does today. So I want to give you a couple of different types of scenarios for you to be able to understand the difference. So the first one is called buffet services. Okay, this is just an internal fun name that I like to call it. So a lot of people, what they used to do, especially if they were like more like tax focused, with bookkeeping being like their secondary or their auxiliary services, it'd be like more of a CPA firm, an enrolled agent firm. They'd be focused on tax prep, entity structuring. They'd be focused on tax planning, business taxes, personal taxes, quarterly tax form filing, right? And then they would have bookkeeping as like their secondary thing. Now, the problem with this is that if you're working with the wrong types of clients, then every client's gonna have a little bit of something, but not a lot of everything, right? So it'll be like one client is paying $400, $450 for a tax return, right? Individual tax return. Maybe another person's paying you $1,000 for a business return. Maybe another one needs bookkeeping. Maybe another one needs their entity structure. But you're just gonna be so spread out, right? And every client's not really giving you that much money. So it does run you the risk of capping yourself out, because then you need to hire staff members prematurely because you have so much volume, and it's not easy enough to get into a rhythm, right? Whereas let's say that you have one client that needs a bunch of stuff, right? So let's say they're gonna give you probably about $20,000 in their first year, right? For cleanup, for bookkeeping, for tax planning, for entity, like taking from LLC to an S corp, from doing business tax to individual taxes. All this equals $20,000 in your first year. Okay, if you get 5 clients, yes, it's a lot of stuff, but you're not gonna be spread so thin in a way where it's like it prevents you from reaching your revenue goal. You can still hit your revenue goal with 5 clients, right? But again, that's very rare for a lot of those kind of firms to do that. In most cases, they end up not doing that, and they end up capping themselves out. And that's why, like, you see a lot of them, they have like really low profit margins compared to what you would expect for that type of business. Versus with bookkeeping, it's a little different, right? So in that kind of buffet services, you can make $100,000, but it's less likely for them to make $200,000 than someone who's maybe like doing bookkeeping. Now, when it comes to strictly bookkeeping, right now, the second scenario is high volume, low dollars. So that's a lower price per client. So that's maybe $150, maybe $300 a month clients. Now, in this scenario, you can make a good amount of money, but again, like the more clients you have, the sooner you're probably going to have to bring on staff. And again, you don't have to be like this giant corporation. I'm not saying that, but what I'm saying is every staff member you bring adds complexity. It adds, you have to like coach, mentor, teach somebody, and you have to be able to lower your profit margin to do that. So there is a time and a place for that, but you don't want to do too early. Now, the other risk you run is that when you're doing a lower price per client, you're again going to cap yourself out. Because if you're working a full-time job, you don't have unlimited hours. And even if you did have unlimited hours, you don't have unlimited energy. So it's like there's just so much task switching, so many different clients you're working with, that just takes a lot of mental drain and a lot of mental energy, that it slows down your ability to go further. And that can actually lead to burnout a lot faster than if you have like maybe 1 to 3 clients that are paying you a lot more money. Okay. Also, what I found is that like for bookkeeping clients, it's very interesting, right? Because even if they don't have a lot of money, they're not paying you a lot of money, there's something called an equal value exchange, or a reasonable exchange of value. So what does that mean? So if someone pays you $1, usually if someone is a little bit more established, they're better at sales, they're better at marketing, they're better at business, they have more money, they're expecting, they pay $1, they get $5 worth of services. That's a reasonable expectation. But that's for people that are doing really well. People make 100K, 200, 3, 5, a million plus, right? After a certain size, when they start making 10 million, that's when they kind of get like more into la la land. But 100K to about $800,000 a year, if that's like what they're paying themselves, they generally are a little bit more reasonable. But unfortunately, a lot of the people you're going to run into when you're starting your business are people that are making like $10,000 a year, $20,000, $30,000, $40,000, $50,000 a year from their business. And they live in a world of, I pay $1, I'm expecting $500 back worth of service. And it's that math does not work very well, because then they're paying you like $100, but they're expecting literally like $50,000 worth of services. So that means that they're calling you, oh my gosh, you're my business partner. It's like, why am I your business partner? I'm only getting $100. You know what I mean? It's just $100 a month. It's just not enough. But they treat you almost like their business partner because they don't understand a fair exchange of value. That's the one where you like hear people talking about, oh, this guy was calling me in the middle of the night. Oh my gosh, this person was so demanding. Oh, this person was that. It's literally because they were expecting a lot more from the value they're paying than what was actually reasonable for a regular person. Hey, so back to it. So the next scenario is going to be low volume but high dollar amount. So I'm a little bit more, what is that called, where I'm more biased towards this, right? So lower volume with a higher dollar amount. Number one, keeping the scope like as tight as possible. Now, the reason why it's important is because you don't want to do a lot of task switching in your day. So you want to make sure it's as consistent, as simple as possible. If 1 minute you have to have your bookkeeping brain on, the next minute it's your tax brain, the next minute it's your consultative brain, then you have to do like a call with your client, then it's like the more times you just switch and the more people you have to like have conversations with, the more mental drag this kind of adds, right? We want to keep as little mental drag as possible so we can like still remain mentally flexible to grow the business. Once you've hit your revenue goal, once you're making as much money as what you probably either want or your goal, if you're in more of a stabilization mode in your business, okay, you can do more task switching. You can, because you don't have to be as mentally flexible to start growing, right? But I like doing basic books, lower complexity, but a higher volume of that. It's easier to outsource and subcontract out to other people versus some people like doing higher complexity CFO services. I don't like those as much. We do offer them, yes, but I don't really like that as much because it is a lot more you focus. Now, in my journey, I like doing like videos like this, right? So I don't mind spending time talking. I just don't really like doing a lot of back and forth, right? That's my weakness, right, in terms of that. Now, if I liked doing more screen time, and it's not that I don't like talking to people, I just don't like sitting on Zoom for very long. That's the problem, right? Because like with my eyes, it kind of makes me more tired, so I don't like doing Zoom. Now, I'll do a phone call with you all day. I don't mind that, but in a lot of cases when it comes to CFO, it's easier if you do CFO services like over Zoom, so you can like share your screen, you can give like more presentations, you can do presentations, you can screen share, and it's just a little bit easier. But for me, for example, I just like keeping the scope as simple as possible so you can just selling as many bookkeeping products as possible. Same thing with like cleanup services. So I do like cleanup services because once you get into that rhythm, it does move a lot faster, right? So it's either that I like the high monthly recurring because it's easier to keep them engaged. And here's the other thing. Now, when you do have a lower volume, higher dollar, you don't want to go ultra low volume. So what do I mean by that? So let's say that your goal is to make 20K per month. You don't want 2 clients at 10K per month each, right? Because then if you lose like one of the clients, your income just got cut in half, right? I would probably do it more like maybe, let's say, was it 20,000 divided by 8, 20,000 divided by 8. I would probably want to have like more like 6 to 8 clients. Let's say 8 clients at $2,500 per month. That's why if you lose a client, your income is not like 100% devastated. So understand what I'm saying. And like when I say a high volume, right, that's when I've seen some people have as many as 200 monthly bookkeeping clients for like they're a very small firm, barely making 15K a month, at 200 monthly bookkeeping clients. Versus when I say lower volume, that's like around 8 to about 12 is when I say low volume. So it's like lower-ish in the grand scheme of thing, but it's not like ultra small, right? And just keeps everything a lot simpler. You can move a lot faster.